Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, December 17th. Wild ride yesterday in the pre-market session. Asia, China came out with their HSBC PMI, and they were actually worse than expected, and the ES took a real big hit, down about 8-9 handles. And when I was recording this video yesterday morning, early on, we were down about that. And then Germany came out with their PMI, and they had some big numbers, some stellar numbers, which actually beated expectations. And the markets actually really just ripped to the upside. So crazy, crazy day. And that is the moves you're going to get, especially when you get closer and closer to the Christmas holiday. A lot of people are gone. A lot of traders, portfolio managers closing their books up. And we did have a big up day. Dow Jones up 129, Nasdaq up 28, S&P up 11, and of course the Russell up 1280. But again, I've stressed out many times when you have these moves, they're kind of falsified here. And I mean, why? Well, there are very few. The indexes are moving, but the stocks, there's a handful of stocks that are just kind of moving around in the market. Everything else just literally just gapped up and just rolled over and faded the whole move yesterday. And you could name a half a dozen stocks. Just go in and type in some stocks, and you'll see that the whole move was basically faded into the close. Other than, of course, the indexes, the Dow, the Nasdaq, S&P, all held up in their gains. So I think a lot of the market participants are either just hedging or just buying the index, and that's really what it comes down to. And it's very frustrating, obviously, if you were holding longs and you didn't participate in that move. And that's frustrating, especially when you're on the right side of the trade. And that's where I see the flags come in, and I say, all right, well, wait a minute. You know, the markets are up, and longs are just getting faded into, as soon as they open, within the first half hour or so, markets, the buying has died. And that's something that you really have to use caution here, especially when you trade in the next few weeks going into the holiday season. January is going to be a different story. I think January 2014 is going to be some fantastic opportunity, especially with the markets at these lofty levels. Now, we do have Fed meetings today and tomorrow, and the Fed will come out with their comments tomorrow. I believe it's 2 o'clock, so I think it will be relatively quiet. We're down only about $1.75 in the E-mini electronic session in the overnight, so pretty quiet, holding up most of the gains. But we'll see. This is going to definitely be a stock picker's market. You look to buy quality stocks, and they don't move. In a move like we had yesterday, it's disappointing. So anyway, be selective, take a step back. No need to put on a lot of size here. There's going to be plenty of opportunity. And there is opportunity, believe it or not, between now and the end of the year. Just have to be patient and wait for the trade setups to actually occur and start to happen here. All right, so let's go right into the charts. I'm going to go back to these indicators that I'm watching, and not much, but I'm just going to show you stocks above the 50-day moving average. We did get a little bit of a pop yesterday, up 390, but not much. So you can see stocks really aren't moving. They haven't really done anything, up only 3 on the stocks above the 50-day moving average. So we really haven't seen much movement in that sector. In that indicator. Okay. New highs, the New York Stock Exchange new low, We have that inverted head and shoulders. Well, we didn't move either way, down 10. So we really didn't move at all. If the markets were to rally, these new lows would actually start to decrease a lot. But actually, we ended up being down 10. So, again, another thing just to keep an eye on, it's just something's not right here. Indicators are pointing doing something different, so we do have definitely divergence here in these indicators and what price action is telling us in the indices and sectors. Okay, new highs, new lows, up 70. And we barely just popped up above the zero line here. So, again, nothing really, I don't see any strength. And, again, because of the fact is obviously one of the things that is skewing everything is the holiday season coming up. Here's a tick. Again, up above 220, really didn't go anywhere, as you can see here. So a big move yesterday, tick really not confirming. And lastly is the VIX. One thing that I do see is that we had a big move up, and the VIX was up yesterday. So we are still right now in a sell mode because we do have the VIX outside of the Bollinger Band. We need to close inside the band, and we did not get that yesterday. And I really we're certain that we were going to get it, but we did not. So to me, right now, the VIX hovering up outside the band needs to close inside to get that buy signal in equities. Now, obviously, I do see a possible rally going into the end of the year, but maybe 1 or 2 days lower, another shakeout day or two, and then we kind of run back up to the upside. But again, just something to think about, something to digest. Here's the daily ES, down $1.75 right now in the pre-market. We're hovering above the 50-day moving average, as you can see. But we did get across in our 1820 finally from, we haven't seen that since October 9th. So we definitely got that. But we need a little separation to really confirm that, right? That we're starting to move a little bit lower and the averages are starting to roll over here. A lot of support, but we're still just underneath the 1618 and we're above the 1272 extension. So let's just keep an eye on what's happening here. Here is the 1 hour chart where I have labeled some key areas of support. We hit that 1752, and this was yesterday morning. As you can see, we literally sold off one candle really hard, and then all of a sudden we rallied back up again. So you can see that buyers are still around, but once the market opens, it's just that the buyers are not there anymore to support it, and we just kind of fade, and sellers are non-existent. Here's the USO. Again, I'd like to see USO come right down to here. You see that 20-day starting to creep up. That's going to be a good spot, 34.40, even a little bit lower, actually. Let it base a little bit if we can get it down there, because right now it's very well bid up crude oil. And I think that if we take out that 200-day moving average, I think you're going to get a big move to the upside. Look at the volume profiles here. We have a thin zone, and when you get above that area, right, we were in the thin zone now, but you get above that area, and if we get that 200, which is capping that rally, I think you're going to get a really big push up to that $38 area, back up to the upper end of this range here. And I think that'll probably come into 2014. Okay, here's the GLD. And GLD, we had a big move up, and gold is down about 5 right now, but starting to base here. So not, and you see the Bollinger Bands are pinching. So I want to see a big move to the upside. If we can get back underneath that 50, that's where I'm going to be looking to short it. Or a big flush down, I'd be a better buyer there. But not in here, not right now. You can see we're having energy starting to build here with these Bollinger Bands. So it's something interesting to watch. But I think the metal is going to be a good trade into 2014. Here's the spiders. Just really, we did have an outside day yesterday. Obviously, we took out the 2 days, but we're still within that big down candle, so maybe we get back above that 200, the 20-day, excuse me, and then start to roll again. But I like the way that we're starting to unwind our overbought readings and the momentum indicators here. So that's a good sign that, you know, maybe if we just start to unwind some of these indicators and start to roll back up again, we'll have some energy at least to test the highs maybe by the end of the year, by the end of the next couple of weeks actually, which would be the end of the year. Diamond, same thing here. You can see took out the previous day, so we did an outside day close, which is bullish, and let's just see if it has a little bit more legs here. The way it's looking right now, I think we're just going to digest what the Fed's going to, let the Fed come out with its announcement, and then kind of go from there. Okay, that's that 2012 low, and we're back testing this bear flag, as you can see, and now we just kind of retraced it a lot. So the transports did well here. They definitely held up. So let's just see if we get a little bit legs, we can try to get to above here. And again, Bollinger Bands are starting to tighten here, so you can see that energy is building in the marketplace. Same thing with the Russell. You can see the Bollinger Bands here starting to tighten. So to me, it looks like that we're kind of building up into some kind of energy for another move. Now we don't know which way it'll happen, but I think we'll probably consolidate today. Not much happening, and then tomorrow we get the move, and then that'll probably dictate the rest of the trend for the rest of 2013, okay, for the next 2 weeks. So that's going to be where we are. And probably going to be, as we are reducing our volume, right, in the marketplace because everybody's leaving, we're going to get some bigger moves because they are going to be more exaggerated. XLF. And I tell you, I love the banks. Wells Fargo, another great stock here. Look, as you can see, Goldman here taking out the highs. It reached my price target here. So right now, for me, for Goldman, I like to see it kind of pull back down here before I would get involved in Goldman again. But JP Morgan looking fantastic, as you can see here, hasn't really moved yet. price is building pressure here, kind of consolidating for its next move higher. And Wells Fargo, I'd be taking a look at as well as Citibank. Here's the IGN, the networking sector. Again, just chopping around here. Really been a quiet trade. But watch that technology sector. And of course, we have Apple. Apple sitting here inside day, consolidating for its next move. 490. Actually, 490 is a little bit weird, but at least 500, 524. Right up in here, 530 would be a next buy-in area, at least for a trade. And see what happens. And here's the cues lastly. As you can see here, holding at 20, but you see energy's building. So you can see in all the sectors, the Bollinger Bands are starting to curl in and starting to tighten, telling us that a move is coming in the markets. We don't know which way, and more than likely, it's probably going to be the Fed statement tomorrow at 2 o'clock. So just take a quick heads up. Remember, the days are very boring lately. They have been boring, and it's going to happen. It's going to get worse until we get at least a little breakout and or a breakdown in the markets tomorrow. We'll see what happens, what the Fed says. Be safe out there. Be selective in your trades. You don't have to kind of push it. Let's see what happens here. There's still going to be opportunity between now and the end of the year. That's for sure. Have a great day, everybody. We'll speak to you tomorrow. Take care.